I started trading 7 years ago and I failed until I understood a profitable entry model that gave me sniper entries. If you can master sniper entries, this can be the final piece you need to go from an unprofitable trader taking low quality trades to a profitable trader taking high quality trades. In this video, by the time you're done watching, you will master how to consistently execute profitable trades like a pro, how to amplify the amount of profit you make per trade, and how to make trading less stressful with one repeatable entry model. Finally, I'll show you real examples on the chart using these concepts so you can apply this into your own trading system and become profitable. So I failed at trading until I understood this 3-step sniper entry model that I'm going to share with you today that actually helped me become profitable while also simplifying exactly how to enter a trade every single time. Now, before I explain the 3 steps that give me the highest probability entry model, I want to ask you, before you watch this video, out of these 2 options, which one do you believe is the highest probability entry model? In the first example here, we can see we have 3 touches of this trend line. We have this level of support and we can see that the stock is coming back into this trend line for a potential push to the upside. We're looking to go long on this position back up to high of day. And once again, we're near support with our stop loss just at a break of this impulsive candle. And then for option 2, we can see we're pulling back. We have somewhat of a trend line here as well. However, we're pulling back into a support area. Our stop loss is simply a break below the candle that we're entering in on. And then we are once again looking for high of day on this trade as well. So before you watch this video, in the comments down below to test your knowledge, comment either option 1 or option 2. Which entry model do you think is the most high probability? And then by the end of the video, you will learn exactly which trade was better. And I'm also going to explain why one of those options was much better than the other one. A lot of YouTube videos will explain a trading concept, but they won't explain why it works. And understanding why a concept works is the most important, because when you see it in real time, you'll understand the real interaction that buyers and sellers are having on a stock rather than randomly entering and exiting trades. Now, with this being said, in today's video, the 3 steps to help you get sniper entries every single time you enter a trade are going to be extremely simple, because I believe simplicity equals profitability. And for this video, the 3 steps we're going to use to get sniper entries is: number 1, we're going to talk about how to find high probability entry key levels. This will be done through liquidity. So I'm going to talk a little bit about liquidity, where buyers and sellers are sitting, and how to get the most profitable key levels where we focus on quality over quantity. Step number 2, we're going to establish a low risk stop loss area. A lot of you either have very tight stop losses or they're way too big where you lose too much money per trade and you don't win enough. For this, we're going to talk about market structure and how to identify the lowest risk stop loss. And finally, for step 3, we're going to identify our profit target, but more importantly, we will refine the trade. This is going to be the most important step, because when we refine the trade, that's when we'll actually get a sniper entry and really have that low risk for the highest reward. And then once I explain these steps, we're then going to go over to the real chart and look at real examples. And while we're looking at those real examples, that's when I'll give you a couple more tips to really get that confirmation on the highest probability entries. So for step 1, we need to find high probability entry key levels. Now, as a new trader, when I first started trading, this is how my charts used to look. You can see the amount of key levels that we have on this chart, and you can see that some of these key levels, the stock is simply slicing right through them or going right above them. It's not really respecting these key levels, and 90% of traders simply can't identify profitable key levels where the most buying and selling is happening. And due to this, they start marking out every single key level or pivot point, and then they get confused on exactly what is going on in the chart, just like this example. So if this is you and this is how your chart looks every single day when you come into the market, you will continue to fail because you're not able to identify profitable areas to buy and sell the trade. And once again, this was me as well, until I understood that you want to come into the day with the least amount of key levels possible. After 7 years of trading, I can confidently tell you the one thing I always focus on is the quality of my key levels and zones rather than the quantity. So I'm not going to mark out every single pivot level, but rather I'm only going to mark out the ones that really count. On the right side of the screen here, you can see we only have 4 key levels, and that's it. This allows me to get precise entries. It's much less stressful because I have a simple and proven formula that I use every single single time. So it completely eliminates the guesswork in trading and it is very systematic. And finally, I can repeat this process every single day and it takes me only a couple minutes to mark out my key levels before the market opens to have the most profitable yet high probability key levels. So for me, every single day I draw the exact same key levels. This consists of the previous day high and low, the previous day pivot levels. These have to be sharp moves, and finally the pre-market high and pre-market low as well. Now, some of you may ask, what about the 5-minute opening range? Because we're talking about before the market opening, these key levels I would draw out before the market opens, and then the 5-minute range I would add on after the market actually does open. But coming into the day, these are the only key levels that I draw out every single day. And if you've been live trading with me for the last year in the Accelerator or Traders Lab, where we've been trading live every single trade that I take, then you know that this is 100% true. And these really are the only key levels that I trade in front of hundreds of traders. So once again, using the example that we saw earlier, we marked out the previous day high, which is this green line right here. We marked out the previous day low, which is this red line right here. And then we marked out this previous day pivot level. You can see this is where we consolidated for a little while before having this sharp move to the upside. I'm only going to draw out previous day pivot levels where you have the sharpest moves, meaning where buyers and sellers have the strongest interaction. And finally, we marked out pre-market high. I did not mark out pre-market low because it is very close to the 280.72 level. So I'd much rather focus on the quality of this level rather than just marking out another key level of the pre-market low, just because of how close it is. And once again, when I get into the real examples and you have a couple more trades to look at, this will make much more sense to you as well. But going into the day, these are the only key levels that I'm going to mark out. For step 2, we need to establish a low risk stop loss. Now, using the same example that I just showed you, now the trade has actually opened up for the day. It came back into this 280.72 key level, which, if you don't remember, this 280.72 is the previous day pivot level, and you can see it held it at support, and now it is breaking below that support and coming back, acting as if that support is now resistance. This shows us that this key level did indeed have significance, and it also aligns with the 5-minute retest. We can see 1, 2, 3, 4, 5 minutes. This is the 5-minute low right here, and the stock is retesting the 5-minute low as well. So if you're able to actually identify the most high probability key levels on the stock before the market opens, it will most likely already align within the opening range and pre-market levels as well. Now, really quickly, for anyone that doesn't understand why this specific trade is actually an entry that we can take, we first need to understand market structure. When we understand market structure, we know stocks can only move in 3 ways, which is the uptrend, sideways or consolidation, and finally the downtrend. Now, I have a full market structure guide and everything you need to know to start trading from absolutely scratch for absolutely free in the link in the description. It is a playlist titled How to Become a Profitable Trader in 2025. Anything that you're confused on in this video, that free playlist will most likely have the answer to your questions. But just to simplify market structure very quickly here, with market structure, when we have an uptrend, all we're looking for is a stock to open up here, make a high, which is called the higher high right here. And then when it comes back down, it needs to create a higher low that is above the opening price. As long as this continues to happen on the stock, a higher high from this previous high and the higher low is above the previous low, then this shows that the stock is indeed in an uptrend. For sideways action, it's pretty simple. We have equal highs, meaning that the stock is continuously in range and there is no real move to the upside or downside, which means buyers and sellers believe that the stock is at a fair price. And finally, for the downside, we can see we open up here, we create a low right here, and then when we pull back, we have to create a lower high from where we originally opened. And once again, just like the uptrend, we need to create a lower high and lower low, continuing the trend to the downside. Now, once we understand this, we can clearly look at this stock right here and understand that we are in a downtrend. Why is this? We can see that we opened the stock up here, we created this low, we tried to create a new high up here, which would indicate that now buyers are stepping in, but on this pullback, we needed to hold this previous low. However, we were not able to do that, and now we actually just created a lower low, and this is now pulling back into a retest area. If you haven't watched my channel before, I trade the break and retest. If you haven't watched my channel before, the only setup that I trade is the break and retest. Next week, I'm going to be doing a full strategy setup guide on the break and retest, in depth on everything you need to know with back test tested results. So if you want that video next week, make sure to get this video to at least 3,000 likes. If this video has 3,000 likes, then next week I will drop a full in-depth guide on exactly how to trade the break and retest in the most profitable way. However, on this retest, what we're putting in now is a potential lower high. Now, the reason I say potential lower high is because we have not confirmed that this is a lower high just yet. The stock could potentially move back to the upside as well. Trading is all probabilities. However, the probability of this being a lower high is extremely high due to the fact that we are in a downtrend and we are retesting a previous support now turned resistance, and therefore this would be a good low risk downtrend entry. So now that we know that this is a good trade, where should we put our stop loss for the most sniper entry? Well, for this example, the stop loss should be at the break of the potential lower high. Why is this? This is because we can see that we are currently retesting this level and we have this impulsive candle that broke. This would be our stop loss, the impulsive candle that broke below the support that has now turned resistance, which means that sellers want to keep the stock below this level. If we break back into this level, this either means that the stock is now going to move back to the upside because buyers are overpowering sellers and turning this resistance into support, or this means that the stock just may range and consolidate in between these highs and lows, and that is going to give us sideways action. So we don't want either of those scenarios to happen. For the most low risk stop loss, our stop loss is simply going to be the break of the impulsive candle that broke below this 280.72 key level. So now that we have the key levels, the entry, and the stop loss, for step 3, we need to identify our profit target and refine the trade. When we look at this trade right here, how are we actually supposed to refine this trade and find the most high probability profit target that this trade could hit? Well, that's where we come back to our key levels, because we know we have quality key levels and we didn't have quantity. And when you do have quality key levels, then you can easily see where the most liquidity on the chart is sitting. We know the most liquidity on the chart usually sits above previous day high or below previous day low. And in this example, that is exactly what we can target. The only key level that we have for this trade is the previous day low, and this is where the most liquidity for this trade would be sitting, and that's going to be our profit target for this specific example. And once again, if you're not sure how to get these profit targets, when we actually get to the real examples, you'll be able to see how I identify these profit targets on multiple scenarios, and then you'll have more confluence to actually enter these trades as well. So once again, our profit target is going to be this previous day low, and in terms of trade refinement, what we want to wait for is always the candle closure and what the price action is doing. For this trade, because we are in a downtrend, we want to wait for weak price action. If you don't understand how to read price action, once again, the playlist in the description has a full guide on exactly how to read price action for absolutely free. But in this example, we can see that this stock has one of my most favorite candles. This is the inverted hammer or the shooting star candle. What does this signify? Well, it signifies that the candle opened up here. We then tried to move back up into this resistance, and buyers did try to bring it above the 280.72 level. Sellers were extremely strong on this trade, and we brought it all the way back down and closed this candle at brand new lows. This shows that sellers are in control at this 280.72 retest level, and this is a high probability entry for us to actually enter this trade. So now that we actually use these 3 steps, let's see how this trade actually ended up playing out. And in this example, we can see this trade made us $9,470. It moved all the way down into our previous day low level. This was a very simple entry model, only using 3 steps to give us the most sniper entry on this trade for that continuation play to the downside. So far in the video, we talked about the 3 steps to get sniper entries. We talked about high probability key levels. We talked about how to establish low risk stop losses. And finally, we were able to identify our profit targets and refine our trade. However, we need to solidify these concepts and look at a couple more examples so you can actually use this in your own trading to become profitable. So now I'm going to show you real live examples of me using these concepts in real time to get sniper entries. And then after these examples, these 2 options that I asked you to rate in the beginning of the video, which one you believe is the highest probability entry model, we'll come back to these 2 trades after the live examples, and you'll really be able to identify which one was the highest probability entry model. And I'll show you exactly what happened on both of these options. So for the first example, I just want to solidify exactly how to get the most profitable entries possible. And then I'm going to show you a live trading example where I was trading in front of hundreds of traders who actually take the trade and make real money. So for the first example, for step one, just like I talked about, we need to first mark out our key levels. In this example here, the first key levels would automatically be the previous day high, and we have to mark out the previous day low as well. The next key levels is going to be the previous day pivot levels. Now in this example here, you can see that this stock slowly moved to the upside just like this, and then we had a little bit of consolidation as well. In this consolidation and this move up, there really wasn't any key levels for me that I would potentially mark out. Most of this is mainly noise, because when we're looking at previous day pivot levels, we want to see something where the stock has a sharp move from the upside or a sharp move from the downside. And in this example, we can see that we slowly moved up and then just kind of consolidated, and therefore there's not really any pivot levels that I would draw out for this example from the previous day. So if there's no previous day levels, the next levels are going to be the pre-market low down here and the pre-market high. So you can see we're coming into this day with about 4 key levels, and the stock is gapping down below the previous day low, showing that sellers are in control here, and we're going to be most likely looking for continuation to the downside. So let's play out this trade and see exactly what type of entry we get. So right off the bat, we can see we broke below the previous day low and we broke below the pre-market low, showing that sellers are indeed in control, and we are currently retesting the pre-market low with weak price action. So this is our entry model, but now we need to talk about the actual entry. How are we going to take this with our stop loss, our profit target, and how can we refine the entry as well? So in this example, we can see this is where we can enter the trade. Our stop loss, once again, is going to be the impulsive candle that broke below the pre-market low level, or the level that we're trading at. And because of this, our stop loss is going to be this 932 candle right here, and our profit target, if you've watched any of my previous videos, has to be at least a 2-hour multiple. In this example, we can simply zoom out and see what other key levels we have. For me, what I can see is we have another previous day low level right at that 115.42. This is the previous day low from 3 days ago, and because we're already below both of these previous day lows, this is going to be the next level that this stock has to gravitate towards, because the most liquidity is going to be sitting at that level. Because we understand the context of this trade as well, this would be about a 5.35 risk to reward trade. In terms of refining this trade, we already are seeing the weak price action, buyers try to bring it above. We are now wicking back below, showing that sellers are indeed in control. Once again, for 5.35 risk to reward, this means for every $100 of risk, we would make $535 of profit. Let's go into a short trade here and see exactly how this trade plays out. Once again, you can see that rejection here right off that 118.36, showing that sellers are indeed in control. And just like that, using those 3 simple steps for the best entry model and sniper entries, you can see that when we entered into this trade, we had no drawdown, and it was a simple move down into the previous day low level, and this trade resulted in $2,510. Now, I hope this trade gave you a little bit more context on how to get sniper entries, but now let's go look at a live example in real time on how I actually execute these sniper trades on a consistent and daily basis. And then at the end of the video, we'll go back to those 2 trades that I showed you in the beginning of the video, and I'll explain which trade was the most high probability entry model. All right, before I show you the live example for this Tesla trade that made me $22,000 in a single day, I just want to show you exactly the key levels I had before I entered the trade, and then the thought process for the actual trade as well. So the key levels I had for this trade is going to be the previous day high, the pre-market high, and then the previous day low, just because pre-market low is so close to the pre-market low. However, if we play this trade out, the difference is when we broke to the downside, we never came back for a retest of the actual previous day low, which is our last key level. So even though we couldn't use the key levels that we have here, I still got the most sniper entry on this trade possible. And once you watch this live example, you'll be able to understand how to enter into sniper trades, even if they don't come back to your retest levels that you drew before the market opened. but how to draw new key levels as the market progresses that will be low risk. So let's go over and watch the live trade that made me $22,000 in a single day. All right, so here we have the Tesla trade. As you can see, we already opened up and dropped below the previous day low. So we are below the previous day low and we are below pre-market low here as well. And though I was waiting for a retest of the previous day low for continuation to the downside, we know that we never get that retest level. How was I still able to get a sniper entry and make $22,000 on this trade, even though I didn't get this retest? Well, let's play out this trade and see exactly what happens. So currently Tesla is actually back at a support level. This is a daily level from 3 days ago on Tesla. This is where it's bouncing from. For me, the key was that Tesla needed to break below this key level, and then I would be interested in a short position because we have a clear support and I wanted that to be used as resistance for a move to the downside. So let's keep playing out this trade and see exactly how I entered.
He used a little bit of rejections here on high of day, and then Tesla obviously, right, nice little drop into low of day off of that 249 key level, right? 249 key level, nice drop to low of day. What we could be looking for now, if the market does want to continue and Nvidia doesn't show strength, is the Tesla retest into 246, right? So basically the low of day that it basically held already, and then the continuation off of that name.
So as you heard me say, Tesla had a nice hold of this key level right here. And now what we're waiting for is the break below, retest, and then continuation down on Tesla. So let's see exactly how I played out this trade.
Tesla 246.75 so far, came back, retested, and now pushing back to the downside. We didn't get displacement on that retest. Really, it just moved down, came right back up with no displacement there whatsoever. But Tesla is moving back down to the downside.
So far you hear me say that Tesla, there was no displacement at this key level. This didn't show enough weakness because you can see that this really just consolidated with a 2-bar play here. Yes, it put in an inverted hammer candle, but there was no displacement. And displacement is simply the move after a break from a key level. Now you can see we are actually getting displacement. So this move right here, you can see that these candles are showing that sellers are stepping in. And now what I would be interested in is this retest of these two equal candles and then for a move to the downside. This is going to be a sniper entry because now we have a clear trend, which is these lower lows that we're putting in. And on top of that, our stop loss is very clear. It is a break above the 246.20. And once we actually see this setup forming, then we can also look for our profit target.
Right, you can look at this up close candle for Tesla, 245.73s, 245.73 for the retest here on Tesla. We'll see what happens if the name comes back into that for a low of day kind of move.
Here you can hear me say that Tesla, this up close candle is what I'm going to be looking for a retest for a move back down into low of day and this 238.88 key level. You can see this is the level that Tesla needs to hold now for that continuation play to the downside. Like I said, we have lower lows and lower highs being established, showing that we are indeed in a downtrend. And therefore, if we get weak price action on this retest right here, then I would be looking for that sniper entry to the downside with my stop loss simply at 246.20s. And this is once again over a 2R multiple, meaning for every $100 of risk, we will be making $200 of profit at least. So let's play out this trade and see exactly what happens.
Right, this up close candle, let's see the retest into this up close candle for a move potentially back to the downside. On Tesla, we'll see this retest level. For Tesla, I'd be looking at the 245 puts, if we can see weak price action.
Because I am trading live and I trade live every single day in the Accelerator and Traders Lab, I'm letting all the traders know exactly which contract I'm entering in on. And this way there's complete transparency on exactly what I'm entering before it even happens. So let's keep playing out this trade.
I just took the 245 puts on Tesla, 245.
So here you can see, like I said, step one, key levels. We're already below all our key levels, which shows weak price action. We are now holding this up close candle. I have a full in-depth video explaining exactly why up close and down close candles are so important and how we can use those as well. That is going to be in the free playlist down below that you can watch after this video. But because we held this level, now this will be the sniper entry with the market structure to the downside and weak price action. Our profit target, like I said, is the previous day low from a couple days ago, and our stop loss is simply a break back above this 246.18 level. Now that I enter this trade, let's see exactly what happens when we come back down.
Nice low day drop on Tesla here, 242.30s, 242s, 242.20s. I want to see 242. Let's see if that can come down. Brand new low of day on Qs, 480s, about 70 cents off that 240 level. So like I said, really nice for me. I want to see that 240 key level. New low of day on Tesla showing that weakness.
And finally, here you can see this is where we entered. We had absolutely no drawdown at all. And this trade moved all the way to the downside, held market structure, and hit our final profit target at 238s here with absolutely no drawdown and a complete sniper entry. So this was the live trade that made me $22,000 in front of hundreds of traders. And of course, they were able to take this trade live in real time as well, because I was explaining my thought process, exactly how I trade. And most importantly, they understand the simple system that I use to trade every single day to make consistent profits. Now, with this being said, in the beginning of the video, I asked you which entry model had the highest probability to work out. And now, after watching this video, you should understand exactly what option it is. And if you don't, and you still want a little bit more information on anything that I said, I personally wrote an ebook with every lesson that I've learned in the last 7 years that is going to be extremely helpful for you. It's absolutely free, so make sure to get your copy in the link in the description. But with this being said, the option that won was option 2. So if you said option 2, that is the right answer. And the reason that is, after watching this video, of course, you understand. For this one, we actually had a clear downtrend for this name the whole time. And we actually didn't break that downtrend potentially until above this level. This would have been a higher probability entry model for a move to the upside. But we can see that even this failed. And this is because this stock simply did not have enough strength. It was not in a clear uptrend. And of course, the risk multiple for this trade also was below a 2R multiple. Whereas for option 2, we can see this was a clear uptrend. We came back for the retest. We are still in an uptrend because of such an impulsive candle. The low we had was here. So this would be the higher low that we are creating. We have the high right here. And therefore, because we're in an uptrend, we can target this high again, looking for even potential continuation. And we got strong price action with this risk to reward being above a 2R multiple and making us $1,550 for option 2. So if you said option 2, that is the right answer. And if this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to subscribe to the channel and follow me on Instagram and Twitter for more education. And I will see you guys next week with a brand new video.